Stavros Tousios for M4Markets. Today we are going to continue our analysis with the British pound and also US oil. We are seeing a divergence over here, and this is when actually prices started also to move lower down. Now we have gotten somewhat of a double bottom down here, and although we have had a false break above the previous high, we are now probably going to go into a potential range. Okay, if not, and we come straight down, there will be the likelihood for a breakdown to around 122.75, or maybe we're going to see a move to the upside. And when we get to around the mid of the potential leg to the downside, there is going to be more evidence on whether this is going to continue higher or we're going to go lower down, i.e. still a breakout or breakdown, however, after a bounce for some sort of respite over here in the short term. Now, as we do see, the RSI doesn't provide anything else currently, okay? And we got that signal up here for the move to the downside. This suggests that because the RSI has shown one signal to the downside, nothing to the upside, that there is a little bit more bias to the downside, okay? However, we need to be very careful about what happens in the short term, because for now we have come all the way up 124.74, which is probably more than the 50% of the leg to the downside. It's the 61.8, which means if we do cross above the 62.8, that will be like the third attempt now. As we're looking for the downside, we'll be looking for the upside. Third attempts usually are breakouts, either after a short correction or straight up. So if we do take over that level again, there will be higher likelihood that we're going to get to at least the 125.24, perhaps even a head and shoulders is going to form, or if we cross above that level, of course, we're looking for the previous high, at least for the short term, even on an intraday basis. And from there, we're going to see how things are going to play out. Now, when it comes to the prices of oil, and starting off with the 4-hour chart, look, we have actually accelerated to the upside, broken outside this base channel, of course, with this gap, breakout gap. We have come and done the 83.50 or so, and now we reverted and we are back within this channel. We stopped at the median line. Now, if we're going to see some respite, then there's going to be higher probability that we're going to stop over here, and then further continuation to the upside might enact. However, if we do go straight down and we fall outside this channel, then this would suggest that the move to the upside, at least for now, it's finished, because we have 5 waves up, probably going to get something like off a correction. And then when we get to anywhere between the 38 and 50 and 61.8, to be fair, which we are now below 23, so that would be between 71 and 76. This could be the area, this is the zone where the trend could start showing signs of a potential move of the continuation to the upside. Okay. Now, let's not forget that the RSI is not showing any signs for now. Okay, it's actually bearish. And until we see an RSI signal, then the situation is probably going to remain the same. We are below the 50, we are very close to the oversold territory, okay, and when that happens all the time and consecutively, then this is an indication of momentum remaining bearish. Now, there is some sort of short divergence here on the RSI with prices, but it's very minimal for us to consider it for a significant move to the upside. Maybe some sort of respite, yes, but nothing too serious. So we will have to pay attention to whether the channel breaks or not, whether the median line holds or not, whether the upside is going to get us above the 81.40 or not, 81.50, and whether we can reclaim of those 80, because this is a very strong psychological level, and if we do fall straight, whether the channel can hold or not. The channels typically do offer some bounce one way or another.